Hello, 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 everyone, and welcome back to another episode of Sipping Wealth Live, where I bring you news, tips, and tricks on how to wealth up. Hey, y'all. So I am back with a new episode. Today, we're going to be talking about taxes, tax planning for business owners. If you are in business, you are honestly behind the curve when it comes to year-end tax planning, but I do still want to make sure that I go live and talk to you all before the new year starts. And while you still have a few months, weeks left in the year, about things that you should do as a business owner, if you're nervous about tax liabilities or really things that you need to make sure that you have completed before the end of the year, make sure that you are tuned into this live because I am about to drop some heavy information, some things that you need to make sure that you're privy to, that you understand, that you actually get done before the end of the year, and things that you should consider as well. Thank you for tuning in. If you are tuned in, make sure that you hit the share button and the notification bell on the Sipping Wealth YouTube channel so that you don't miss out on any other Sipping Wealth lives. Again, like I said, thank you for tuning in, y'all. If you do have any questions while I'm live, feel free to drop it in the comment section. I'll answer them. And we're gonna go ahead and keep it moving because we got quite a bit to talk about, y'all. Okay, so one of the big things that I want to start off with is this BOI report. Okay, because business owners, y'all, a lot of y'all are still out here that have not done your BOI reporting. You know what? I'm gonna do my a screen share here. So for those business owners that have not yet done your BOI reporting, make sure that you get it done because there is a $500 fine. January 1st hit, fine. Okay, so we want to make sure that we are avoiding that fine. It is extensive, it is heavy. If you are a business owner, make sure that you get that completed. So as you can see here, this is the BOI e-filing website. So BOI e-filing.fincin.gov. So this is something completely free. You don't have to pay anyone to get this done. Of course, if somebody is doing it for you, they may charge you to do it because it's their time that they're putting into doing this for you. But honestly, you could do this yourself. Okay, spend the 5-10 minutes on completing this. Get right on the website right after this live. Make sure that you go ahead and get this done. All you're gonna do is go ahead and click on the file BOIR, and you're just going to do the online prepare and submit. So you're just going to do the online form. This is quick and easy. Okay, just all you're going to need is your business information, EIN number, business name, and your driver's license, because you're going to need to put in your driver's license information into here as well. But other than that, and owners, if you're in a partnership, and you're going to do this for every single business that you own. If you have a registered business, if you're in the state of Florida, maybe you registered it with SunBiz or the Secretary of State, wherever state that you're in. But make sure that you go ahead and get this filed. Like I said, it is a very easy application or report. If you are having like trouble, you're like, "Ooh, how do I do this?" They do have. If you go on the BOI filing, and the Q&A section, this is for more information and assistance as well. You could get more information on the get started part of the BOI e-filing. Like I said, this is something that you could really do on your own. Get it done. That fine is hefty. It is, look, $500 per day fine. Knock it out. If you do own a business, if you have friends that own businesses, go ahead and get this done. Like I said, it is very quick and easy, efficient. 5-10 minutes, pop, pop, you're done. Okay. Like I said, you don't have to pay really anyone to do it for you. There is no fee. It's completely free. You just have to get on the FinCEN website to complete it. But if you're paying a third party to, do it for you, there may be third party fees for their time to complete it for you. All right. Very easy. Okay. Now that we got, okay, because when January 1st hit and y'all want to be stressed out, oh my gosh, I have to pay $500 and $1,500 because I waited and I didn't do it. Don't say I didn't warn you. Okay. All right, so I'm gonna go ahead and hop into some other things that y'all want to make sure that you are aware of as we wrap up this year, because we do want to make sure that we wrap up 2024 on as best as possible. It is coming to an end. There's going to be a lot of changes next year. It is kind of like the tax, we like they call it the tax sunset. So a lot of the things that came into play back in 2018 are essentially kind of phasing out. So your accelerated depreciation, your bonus depreciation, excuse me, a lot of these other things, your um, uh, the business deduction, the 20% business deduction. So there's a lot of things that are phasing out. Your even the standard deduction increase. So there's different things that are going to be changing next, within the next 2 years. So you do want to make sure that, hey, you're kind of prepared, especially money wise. The IRS has gotten a lot more kind of precise when it comes to taking the amount of money, tax withholdings out of your paycheck. So that those larger refunds that you're kind of used to receiving, those are kind of like, no longer a thing unless you're like, you're filing with 3 children and you filed with 0 dependents on the W-4. So if that's not the case, then the amount is pretty exact. You may be a couple of $100 having to owe at the end of the year, or you may get a refund of a couple of $100. So the refunds and things like that are changing a little bit. So those days of, hey, counting on that refund to go buy and wall out and all that, it's not really, where what we're used to as far as in the past. There's still the earned income credit, there's still the child tax credit, all these other credits out here that you can take advantage of. But as far as those larger refunds, oh my gosh, I got a refund of 10, 12, $13,000. We're not seeing those as much. Just so y'all know. So hey, Edie MMM, what's up? Thank you. Ooh, don't give me too much now. He said here. Hello, Dorothy. Thank you. Thank you for sharing, tagging the peeps. It is streaming. This is particularly streaming in the Sipping Wealth group. So the person, if they're not in the group, then they have to join the group to see it. But the live is also streaming on the STA page and my personal page and all that good stuff. But yes, all right, y'all. Ooh, that was a lot. Ooh, okay. Okay, so deferred income. So if your business is expected to earn, maybe this is the last quarter, and maybe you're already in the green and you're like, oh my gosh, I may owe quite a bit in taxes. Maybe you want to, defer income for like a January 1st type thing so that it doesn't necessarily hit this tax year. So you have more time to kind of offset it with next year's transactions. So, there's a possibility that, hey, maybe I want to defer that income, maybe the expense. And that works vice versa with the expense. Hey, instead of, if you have a large expense coming up, maybe in January, maybe you want to make that expense in this month, December, so that it can help bring your taxable income down for the 2024 year versus doing that expense in January. So, to help, maybe you're dealing with a tax bill and you're like, ooh, I'm already going to have to purchase another business vehicle, or I'm already going to have to purchase another tractor for the business, or whatever the case may be, whatever nature of your business it is. So if that's the case, maybe you want to make that purchase ahead of time so that it affects this tax year versus next year to help, offset that tax bill. All right. Accelerated deductions. So prepaying your expenses. So that works if you have, like, again, if you're like, oh, I'm going to be dealing with a tax bill, and you're like, oh, I don't want to have to pay the IRS this much money, but we made money this year, which is, and this is just for the people that, maybe you're not going for a large bulk of funding, things like that. And you're able to decrease that taxable income a little more. So maybe you want to accelerate your deductions. Maybe you want to prepay your expenses, like your rent, utilities, your business insurance. Maybe you want to go ahead and pay the expenses that are for next year, this year or next month, this month, so that you can, take those deductions for 2024. All right, so that's another possibility with decreasing those taxable income. The nature of the game is to make sure that you get it done while the clock is still ticking within this year. Because once December 31st, 11:59, it goes to 12 a.m. hit, it's a new tax year. Like, it's over. Whatever happened, happened. And there is very little that I can do. By the time y'all, my clients come to me and they're like, hey, so I have a tax bill. So this and this, what do I do now? What tax strategies do you think I should employ? Well, you let the whole year go by. Like, this is the time where you should have been employing those tax strategies, right? While we're still in the tax year. So instead of waiting until January, there's very little that you can do once the new year start. What are we gonna we're gonna max out your retirement contribution. We're gonna, do those little things, but the huge, big impact things are gonna happen in the year that you're in. All right. There is still the 179 deduction and the bonus depreciation. So yes, the 179 deduction is smaller. So instead of that 100% that we were used to in the past, it went to 80%, and then it's going to go 60%, and then it's going to go, it's 40% and disappear. All right. So it is, getting smaller and smaller. So instead of that 80% that we were able to get last year, it's not the same, but we still have, a little accelerated depreciation that we can do for any of your assets that you did purchase in 2024. So we can still not, take an accelerated depreciation of 60%, and we can do a bonus depreciation on top of it. But, I submitted my information to your website. When do I get a call from you? Yeah, so I'm sure Shaya will take a look at what you submitted, and then we'll set up a call. I'm not sure, or she probably had already looked at it, but I'll see what you uploaded and things like that. We'll get you scheduled for a call. No worries. But yes, okay. So bonus appreciation. Maxing out your retirement contribution for my self-employed people. Like, this is such an underused strategy. Like, and for my self-employed people, a lot of the times, let's keep it a buck. Y'all gonna be putting away for your retirement, okay? You're just running your business. You're making money, you're spending money, and you're not really planning as far as future-wise, retirement planning, things like that. As a self-employed person, hey, you're not reliant on an employer to set up a 401k or anything for you. You have to do that. But the benefit of you doing that with your business, setting up a SEP or a simple or 401k through your business, is that those are deductions. So not only are you setting up a retirement plan, which is the deduction for your business, also contributing to your retirement plan on a personal level and a business level. So, and there are benefits, there are credits out here, and there are deductions that you're able to take advantage of when you're doing a strategy like this. It is heavy. So if you're a business owner that is like, oh, you know what, I need to set up a SEP, or I need to set up or I need to do that retirement strategy, let me know. I think it's such an underutilized strategy, and honestly, you can leverage it heavy. Chef's kiss. Okay. Another thing is review your estimated taxes. This is another thing where you do want to make sure there are tons of people, you're not paying your estimated tax payments quarterly, and then you get to tax time, and not only are you paying the income tax bill, you're getting hit with a penalty for estimated tax payments throughout the year. All right. Or you're not doing it within the quarter. So, and then now you have interest, you have the penalty. If you file late, now you have a late filing penalty. So, to avoid all those penalties, we want to at least get those estimated tax payments in to avoid that penalty. All right. Because it's added to the pile. It's money that you could be putting back into your business that now you have to pay to the IRS. And if you got free money to pay out to the IRS, let me know. Give me some. No. All right, yeah. Um, for those that have employees, make sure that you are checking your employee benefits, or even employees in general. Check on your benefits. Check on your health savings plan, your HSA contributions, or even your deductions. Any plans that can affect you as far as tax wise, like your health savings plan, your FSA, maybe like I said, like we talked briefly about the retirement plan, things like that. So you want to look at those employee benefits. Um, and there are others, group insurance, daycare assistance, the list, goes on. Um, just to kind of get a better idea of what you're looking at tax wise. Utilize your home office deduction. Okay, let's not go another year without utilizing that home office. Okay, I know at this point, if you're a small business owner, you are using some space of your home generally as an office space, a storage space, something for the business. All right, so utilize that home office deduction. All right, this is calculating the square footage of your home versus the square footage of the space that you're using for your business. And based on that percentage is what you can write off essentially, as far as a deduction. Now, generally, you do have to have some income of the business so that it brings down that income, but this is still a deduction that you can take advantage of. All right. Even if you don't take advantage of it in that particular year, it can be carried forward into the next year. So maybe, hey, you are already in the negative for your business in 2024. Hey, that home office deduction could go into 2025. Maybe you're going to need that to help offset some of the income in 2025. So still making sure that you utilize that home office deduction. Let me make sure. I want to make sure I ain't missing out on your questions. Okay. All right. Take inventory. Inventory for my inventory-based companies, you have to track that inventory. Making sure that you are properly tracking your purchases and then your ending inventory, and making sure you're properly reflecting that so that you can determine what the actual taxable income is. I've seen people get caught up with this inventory-based businesses get caught up in the audits. So the saying, get that in check for my inventory-based businesses. All right. The next is to take advantage of tax advantage accounts. I already hinted at this. So this is going to be your health savings account, the HSAs, your FSAs. These accounts, if you're using those accounts for medical expenses that you're already going to have to pay anyway, then this is tax-free money. So this is money that if you already pay taxes on that money, then you just sure that on your tax return, you let them know, essentially you let them know and they recalculate it, they give the money back to you. If it's pre-tax money. But yeah, this is tax-free money. If it is qualifying medical expenses that you can make that, hey, you already have medical expenses that you're paying. Use an HSA account. And ladies, for the monthly high feminine products, things like that, a lot of those are already can be go ahead and purchase through these HSA FSA accounts. Okay, FYI. So reviewing payroll. So if you do have payroll, if you are running payroll, make sure that you are reviewing payroll, especially addresses. Let me repeat that. Addresses. So any change of addresses that have occurred, make sure all the addresses are updated. Make sure that you are sending out any 1099s, W-2s to your employees or contractors before January 31st. Like, if you paid them more than $600, make sure that the IRS is cracking down. Like, they want to make sure those 1099Ks, 1099 NECs, they get sent out. Okay. And the IRS said they have time now. A lot of people getting letters. A lot of people's been, they've been more on it as far as the seizure levy notices, things like that. The IRS got time. They say they got employees in the back. Okay. So make sure that you are reviewing, make sure that you are getting those documents out to your employees and contractors on time, because it is a $50 per month per person fine. So it gets hefty, y'all. And that's another thing that IRS been on too, is getting those fine letters out a little quicker. And then making sure that you know the tax deadline. For my people that have S corps, partnerships, for my married individuals, that want to them and their spouse on the business together as a joint partnership. You have a partnership. Do not do a Schedule C. You have a partnership. So you need to complete a 1065 tax return because both of you are on the company. Okay. If you just want one of you to own the company, cool. Do a Schedule C. That's cool. But if both of you own the company, then that is a partnership tax return. That is a 1065. Do not put that on the Schedule C. I see that way too much. And if it is going on a 1065 partnership tax return, you need to make sure that it is completed by March 15th. That is another thing. People getting hit with that fee. You do not want to pay the IRS $600, $700 because you on the basis of not completing that tax return by 15th. Okay, on the basis of not doing that. January 28th for nonprofit, not for profit. Okay, for 1099s. So non for profits, yes. Make sure that you get your 1099s out. Non for profit tax returns are not our returns 990s are not due until May. But that's another thing. Make sure that you're actually getting those 990s completed. Make sure that you're getting those 1099s, W2s, all that out. Look, by January 15th, just to be safe. January 15th hit, you know everybody W2, everybody 1099 out. That's play it safe. It's in the mail. And for those that are like, oh, I'm gonna do my 1099 on my own, I'm just gonna do it. Make sure the IRS gets a copy as well. You have to send it to the client and the IRS. Okay. I owe 15K penalty for 2023. Yeah, that penalty is hefty, and then there's interest on it. The IRS can charge up to 8% interest. So you're thinking about 8% on that, money. It gets up there. It gets up there. And then I know that you said that you uploaded your stuff, so we'll take a look at that as well. We're to talk about the qualified business income deduction, and that is phasing. We'll see what the new tax laws that come out. I already see it. Oh my gosh, I'm sure there's going to be so many changes next year with these tax laws. But for 2024, we already know what it's going to be, at least for now, because technically they could throw a curveball in at any time. Reviewing your entity structure. So you do want to make sure that you have the most tax advantageous entity structure moving forward. So if you know that, hey, maybe I need to set up a call and see if it makes sense for me to change my entity structure. Should I be an LLC? Should I be an S corp? Should I be a corporation? Should I be, I don't know, should I start a non-for-profit? Whatever the case may be. But, making sure that you actually have the most tax advantageous or, the best entity structure right, I think we're here. Hopefully, we are back. Um, I think we're here. Okay, there I am. Cause what? Um. Okay, y'all. Right. What was that? Entity structure. I think we're okay with entity structure. Okay, making sure y'all got the right entity structure. Um, internet kind of gave out, but we are back. Okay. The next is the plan for capital gains and loss for my individuals that are in the real estate space. Maybe you purchased or sold real estate, or you're looking to do so before the end of the year. When you're making large purchases or sales like this, you do want to make sure that you are consulting with, your financial advisor, licensed, accredited financial advisor, not like somebody that just does life insurance type thing. Somebody that is their area of expertise. I have to be, a little more direct with that. And then, or an accountant, when you're doing that, so they can give you more direction as far as what the implications are when you are purchasing these large assets, or even the vehicle that you should purchase these large assets. And then as far as myself, understanding what the tax implications are when doing so, because it's always, and it always happens, it never fails. The client comes, I have clients that come to me during the season and they purchase or they sold, or it's mainly they sold a huge asset or a home or something, and they're dealing with a huge capital gain. Well, that window for a 1031 exchange or the other strategies that you could employ with those capital gains, it went out the window when we started a new year, or when those days went away. So you do want to make sure before you do purchases like that or sales like that, you understand what the tax implications are, because you do not want to get to tax time and you're dealing with a huge capital loss or gain, capital gain mainly. So understanding what's going to happen. And also with your capital losses, if it's non-passive income, if it's only a $3,000 max loss against other income types. So meaning, if you have other investments, then cool. It doesn't matter how many losses you have with one investment versus the other investment. It will help like cancel each other out. But if you have $10,000 in stock losses, and then you wanted to offset your maybe W-2 income, well, it's only going to do up to $3,000. Okay, there is a max, and then everything else you can carry forward into the next year, but generally there is that threshold. All right. Charitable contributions, I have to do like a dump year. So maybe like every other year they do a dump year. So that they can actually take advantage of deduction. So instead of giving tithes and offering to the church every year, they will give 2 years in 1 year, so that they can use the 1 year's deductions to help offset their taxes. So that's a strategy as well. So holding on to your tithes and offerings and then dumping it both years into 1 year to get actually qualify for that itemized deduction in the other year. That's an option. Utilize another credit that is underutilized is the research and development credit. So this is if your business is like in the innovation space, things like that. If you are trying to maybe get an item patent, or maybe a software, or maybe something along that line, taking advantage of that R&D credit can help as well. So that's another thing. And the last thing I want to make sure that I go over is making sure that you clean up your bookkeeping. Okay. For those of you that have been delaying your bookkeeping for this entire year or the last few months or whatever, make sure that you clean up your books. If you are like, hey, I want to pay somebody else to do it, I don't want to deal with it, you can reach out to STA ahead of time so that you have your books cleaned up for the tax season. But make sure that you have your books clean and up to date, and reconciled, because one, this helps for more tax savings. It happens time and time again when I have small business owners and I'm like, okay, so what are your expenses in your business? And they're like, um, and they're having to find expenses, or they're having to dedicate so much time into finding expenses. Well, if you had a profit and loss statement, if you had your books cleaned up, you would know exactly how much you spent with, each place. So clean up your books, make sure that you are ready for tax time. Make sure you have your expenses in order. And this can help with avoiding errors and making sure that you are maximizing as far as your deductions and things like that. And make sure that you just consult with a tax professional. If you do need some assistance or need to make sure that you book a strategy session or a tax strategy, make sure that you reach out to us at STA, Strategic Tax Accountants. I do still have room left on the calendar for the next 2 weeks at least. But make sure that you get it in ASAP, because time is kicking out. The year's going to be over before we know it. And we don't want to be in that tight space. But yeah, y'all, I think that is it. All right. So thank you, y'all, for tuning in to another episode of Sipping Wealth Live, where I bring you news, tips, and tricks on how to wealth up. Have a great rest of your day. And don't forget, let's wealth up.